It's great to have you here to talk about this today. We had you on, I guess, maybe 6-7 weeks ago. You were pretty cautious about China. You thought that there was going to be some genuine trouble for the markets, for the economy there. I wonder if any of that has changed at all, just given the fact that stocks are now lower than they were then. We've gotten past the party Congress. Obviously, the currency's trying to adjust, and maybe we get a reopening. Are you still cautious there, or are there signs that maybe things could turn?
I am still cautious because I think we've got some really big political changes taking place in China. The treatment of the former president of the party Congress was quite shocking. And it really showed that how Xi is pushing his power, is really showing his power to everyone in the party who was at the meeting and to the world. So I think there's going to be a shift towards more of a Mao-type China rather than a Deng Xiaoping type China, if you know what I mean. Less capital-oriented, less market-oriented. So I think we have to be very cautious still on China. I'm not saying that stocks are not cheap. They're very cheap in many cases, but I would be very careful.
Yeah, I mean, I guess I wonder if it also has implications for whether China can be as much or at least any engine of growth in the world or the region. I mean, GDP came in okay over the weekend as well. I just wonder what that means for the whole area there in terms of the Asian economy and markets.
Well, there's still a big economy. They're still importing a lot. They're still exporting a lot, but it's slowed down considerably. And what is particularly worrying is that they are not releasing statistics about the economy. They've cut out a lot of the vital statistics that people look at in order to assess what's going on. And that's not a good sign. Also, they delayed the GDP numbers. So it means that something is boiling behind the surface, and it's not going to be good, actually.
Yeah, clearly markets are worried about all of those things, all the body language and everything else. And where are you perhaps finding maybe better opportunities? Clearly, emerging markets still have some headwinds as well. Strong dollar, global slowdown, inflation still an issue. But where would you prefer to be looking for bargains?
Well, India is the place where we're looking at. We think that India is going to really power ahead. Younger population. They're already posting something like 7% growth, which is probably one of the highest in the world. So that is really the place to be. And Taiwan. We don't think China is going to move against Taiwan anytime soon, although there is the danger there, but not anytime soon. So Taiwan has terrific companies, and a lot of the stocks are down. So that's another place where we want to be.
And when it comes to Taiwan, I mean, is it simply the bellwethers, the Taiwan semis and things like that, or are there other sectors that seem like they're interesting?
We like the companies that are serving the semiconductor industry, the so-called fabless companies that do the software and the design of the chips. Those companies are very interesting. And the good thing about them is that having no factories, if something happens to Taiwan, they can move their whole staff to Silicon Valley or someplace else. In fact, many of them already have offices in the United States and other parts of the world. So those are the ones we're looking at.